Alright, ACB, Aurora Cannabis. Man, this looks like the Twin Peaks, man. Look at that. Man, these wicks on the monthly candle. I respect more and more the messages that this is giving you, man. This is warning sign. This is strong selling pressure on the monthly candle, multiple retries or tries on the weekly. And at the end of the month, they said, no, going back in. Same thing here, going back in. And these are monthly candles. So for this single wick right here, this crazy wick compared to the rest of the body of the sellers coming in, after that, you had an immediate inverse effect, push down on the price action. And then you have to wait before you even retested. 1, 2, 3, 4, 5, 6. Super scared here. Probably you would have bailed out. 6, 7. Then you would have never looked at the stock back. I hate the stock. It burnt me. And it's always all right to bail, no matter where you are. If you don't feel comfortable, you don't think you respect your trading plan, bail. But you always have to, don't be angry at the stock. Don't be emotional. Keep an eye on it. If the narrative changes again back in your favor, or you have a new thesis and then you're able to get in, and then it consolidates and then it breaks out above a base, then you could say, okay, I'm back in. After that, you keep staying in until you get another signal. And now we're getting the same signal that we had before. All those sellers coming in, it's like, we're not ready yet. There's too much emotion. The price went up too high. The industry's not mature. Whatever it is, price action goes back down. And you have to, this would have been a great opportunity. This is people selling into strength. And very thing hard to do. Being able to recognize that you're far away from the 12-month moving average, that it's overextended. And that's when the greed, when you're all here, that's when the greed, oh man, it's going to 16, it's going to 20, it's going. And while you're hoping and greeding, people are saying you're overextended, and technically this has to bounce back down to consolidate. And that's these sellers. Bring all the price back down. So damage is done, like a knife cut, schluck. These wicks, they hurt you. You need time to recuperate, months and months. Remember, these are monthly candles. 1, 2, 3, 4, 5, 6, 7, 8. Took 8 months. And same thing here, more damage. Every time you try to go back up. And now I'll tell you why it's worse this time. Independent of overall market conditions. When you had this knife cut, you were above the 12-month moving average. You still had that momentum going up. So you had a chance here to bounce, didn't quite bounce, but it did bounce eventually. But right now, you're close to the 12-month moving average. You're under the 12-month moving average. And now the trend is starting to change, guys. That pressure, you don't have that momentum anymore to try to bring you back up. It's like you had your first strike and this second strike. And now you're in stage 3 on the monthly candle chart. Lines in the sand being drawn. You need to break out above 10. To be able for me to say I'm resuming that uptrend and have a upwards target. And let's check it out. What is my upwards target? So my target would be 1460, 1450 if I get a close above that horizontal monthly defined resistance. And you have to wait for that, because you have to prove that these knife cuts have fully healed, that these sellers, or now these buyers turn sellers, right? When you're a buyer, you're not a buyer again, you're going to be selling. So that buyer is going to sell his shares. He's going to want to break even. So every time the price action goes up, everybody here that bought in this bar, since momentum is not in their favor anymore, okay, break even. I'm close to break even. Okay, selling, and then the price action goes back down. Ooh. And then after that, until either goes up or decides to totally break down. Only time will tell. But right now, the price action is below the 12-month moving average. I'm gonna have probably a test again of that 550 monthly defined breakdown line, and Pestero. And if you have a close below that 12 month, that target will bring us. Oh, okay. Well, yeah. So if ever we get down to that situation, well, back to $1. I don't know if that's possible, but that's to give you targets. If you have downwards target, that means the trend is going to be downwards. If really it's activated, if it's confirmed with that close below that $5 level. So you really don't want to have a close below that $5 level. Target is all the way down to 1, but you have my targets considerations. You might slow down here, hitting that previously defined resistance, now turn support, what I call a wall, at the 250 level. But until then, if you're below the 12-month moving average, you don't want to be in the stock. You want to wait. And as long as it stays below the 12-month moving average, it's going to start angling downwards. And you're going to be playing with fire right here for that breakdown. Not a place you want to be, guys. Not a place you want to be. Danger zone right here. I could just jump over, did an example. Bitcoin. Just yesterday morning before this broke down, I had posted that these were your signs, extended from the 12-month moving average. All these sellers coming in, big warning sign. It's people selling to strength, not selling into weakness. Where people selling to weakness can be here when they're the pattern's breaking down, where your moving average is being violated. The last resort before you have a chance to bounce back up. If it breaks down below that, that's selling to strength. You're exiting here. And this is people playing the opposite way, saying, I'm overextended. I believe that's going to zap back, closing back on the 12-month moving average, that this exponential growth or move can't be sustained by buyers. So they're selling to strength. They're creating selling. There's no previous resistance up here. People say, there's no resistance, going to go to the moon. No. Eventually people are going to create resistance with that, thinking that it's overextended. There's not enough buyers and it's just going to deflate. So they're enjoying the ride down, that natural deflation because of lack of buyers. Price too high, they're selling. And right here I was warning, you're below 12-month average, starting to angle downwards. Be wary, the pressure's down. And what happened a few hours later? Down. So it doesn't always have to go down. Oh, ACB. But you don't want to be there, especially if you break down below a horizontal defined resist support. All right. That's enough for the monthly. Weekly. Again, like we've noted before, these red candles, big warning sign on those down candles. Mark Minervini, really, when I read his book, really had all the explanations, his examples of his experience, that what this means when you have these crazy red candles. Huge volume, not just a small pullback, big red candle, 30% pullback or more with red candles. It's a warning sign. It's institution selling. It's big warning sign. Something is wrong. You don't know yet, but somebody knows. They're dumping, and that's what you see here. Continuing here. Then you had the other mechanics now entering. People want to catch bottoms. The pressure's off for people selling. Then it just bounces back up a little bit, etc. But this is warning sign. Creating damage. And now what I don't like, we had a few chances that we closed above the 30-week average, but now we're down below. If this closes by the end of the week below 30-week average, the stage 2 is definitely over. You're underperforming the SPX. You're below the Ichimoku cloud. And it's actually angling downwards. Since it's red here, that means the 3 moving averages are already angling downwards. So you don't want to be there. The next step for full meltdown is a close below that monthly defined breakdown line and this weekly defined breakdown line right here. You don't want to be there. So right now, it's definite stage 3. Back into stage 3. Saw it on the monthly. You see it on the weekly, and you don't want to short it yet. But once you're below these weekly and monthly defined. Where's my monthly defined, Patrick? Here, all that noise. Once you're below that weekly and monthly defined support right here, just gonna need that time, that stock to recuperate, guys. So that's unfortunate, but the way it is. Cannabis stocks, I really think it's like Next Big Trade had in his, if you go on his nextbigtrade.com, he had articles back in, I think, 2016, 2017, that cannabis stocks was the place to be. And I believe it was right here. With hindsight, this was the area where you should have been buying when people were starting to price in crazy stuff. And then after that, these were the great rides. You had one great ride right here. You had another ride right here. But this, when you start seeing this high volatility, it's signs, guys, that it's in the weight of evidence. It's signs that sellers are coming in and you're starting to approach a topping action. You had another go at it right before legalization, and same thing here. This is just too much damage now. It's gonna need time to recuperate, and it's time to look for another theme, guys. All right, but keep an eye on it. If ever long-term potential, I don't know, but it's just a question of timing, and you're gonna have to let the market digest new information to see if they want that to go upwards above these levels, or decide to stay here for a while, guys. If it stays there, why leave your money in hope, even if you believe in cannabis, that it's gonna go up? If it's just gonna stagnate sideways for a while, you want to be in the hot theme that's starting just like this. This is what you want to look for here. This type of action, this is what you want to look for. And right now, this is not this type of action. It's too volatile. You have to really let that wind down, guys. High to low, you want that less and less volatile, and then you play. All right. See you later. Subscribe if you like. All right, guys. Thanks for watching.